Tepiero, the founder of DTAP Capital and co-founder of Gold Bullion International, said that gold and Bitcoin will replace bonds as vehicles of portfolio hedge in the long term. Following the noticeable increase in geopolitical risks caused by the trade dispute between the US and China, a growing number of investors have flocked to the bond market, causing bond yield in major markets to drop sub-zero. As CVN reported Tuesday, some strategists suggested that the US may follow Japan and Germany to the sub-zero bond yield territory if the global equities market continues to slip. If the bond market demonstrates instability and uncertainty over the next 12 months, strategists anticipate investors to explore alternative stores of value like Bitcoin. Tepiero said, "This market suggests a massive deflation is coming. Yields so far below worst moment in a entire liquid sovereign bond market will cease to be an asset class as it will have no yield and no cap gains. Long term, no reason to own gold and Bitcoin replace bonds as portfolio hedge." Bitcoin price up more than $1 in the past 48 hours. Can it sustain momentum? Since September 2, the Bitcoin price has increased from $1 to $2 by well over 13% against the US dollar. The Bitcoin price is up by more than twofold since the beginning of 2019. Source: CoinMarketCap.com. The dominant cryptocurrency tested a key psychological level at $1 for a total of 6 times in the past 3 weeks, leading investors to demonstrate concerns about the short-term trend of the IS. You can read full post on CryptoFans News, link available in text below.